The local share market tumbles on fears of a big slowdown in China. More than 1/3 of people cheat on their home loan applications. And Uber faces a $26 million fine in Australia for misleading customers. It's Wednesday, the 27th of April, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Did you cheat on your last home loan application?
Oh, God, no. No. When it comes to that kind of thing, I am painfully honest. How about you?
Yeah, no, exactly right. I mean, occasionally when I have done it, my broker has said, look, if you reduce your credit limit on a credit card or something like that, that will help. But never have I actually cheated on it. I think it's quite an incredible story.
Oh, well, actually, overall, even just those three stories, this is a big news day today. We've got a bit to get through.
We do. We should get into it.
Absolutely. And after the show as well, you've got a really interesting chat coming up today with Craig McFarlane, the Managing Director of Terrapin Australia, about the business of expos in a post-COVID world. But more on that a bit later on. The main story, as we mentioned, Sean, is the local share market, and it fell by more than 2% yesterday, with investors spooked by a potential slowdown in China and in the US.
Yes. Now, less than a week ago, we were talking about the market being just 0.5% off a record. But in the past two trading sessions, it's dropped nearly 4%, including 2.1% yesterday. The S&P ASX 200 finished at 7,318 points, losing all the gains of the past month. It really was a wholesale sell-off, though it was the miners that led the way. And that's because investors are worried that China's growth rate is going to slow appreciably. Evidence of that was what happened to iron ore prices yesterday. They tumbled over the past 24 hours, with the spot price down around $15 to $135 a tonne.
Sean, just before you go on, spot price, it's a term that we hear used frequently. What's it actually mean?
Good question. The spot price is just the current price in the marketplace for any particular asset, iron ore in this instance. It means that you can buy it at that price and it can be delivered immediately. The option, which we talk about a lot, are futures prices. And so maybe in 3 months, the futures price for oil or iron ore, what you will actually pay if you get it delivered in 3 months' time. Spot price is about being delivered today. Futures is about being delivered in the future.
Got it. So the spot price was down around $15 a tonne.
That's right. Now, look, concerns about the rise of COVID in China and subsequent slowdown in that economy really has triggered the decline in iron ore prices. It sent the share prices of the big iron ore miners much lower, and of course they're very influential on the local market. BHP tumbled nearly 6%, Fortescue was off 7%, and Rio Tinto dropped 4%. Some of the smaller producers were hit even harder. Champion Iron, for example, was down nearly 9%. The steel and scrap companies were also sold off. Sims Metal closed 9.5% lower, BlueScope was off nearly 9%. Mineral Resources, which provides services to the miners, it was off nearly 10%. Though it did have the excuse of raising $1 billion. Now, Gold Digger Newcrest was off 3%. South32 maintained its production guidance as opposed to increasing it, and its share price closed down 8%. That's a massive fall for that company. Mind you, South32 has had a great year. The share price of the diversified miner, so it digs up bauxite, alumina, coal, nickel, silver, lead, zinc, etc., is up about 55% over the past year, even after yesterday's drop. Easily the best of the top 20 stocks. Now, the dumping of stocks actually went against the global trend. Share markets across Asia generally rose after Chinese authorities said they would try and support the economy. Wall Street ended higher thanks to Elon Musk's mega deal to buy Twitter. More of that in a moment. Mind you, some European bourses did fall.
Sean, you mentioned plenty of the miners there. What about away from the mining sector?
Well, there wasn't much good news there either. All 11 of the sub-indices of the ASX 200 fell. That's pretty unusual. The best of the lot, the materials index, fell 0.7%. So that means everything else did worse than that.
Wow.
For example, energy stocks, they were really hit hard. That index was down nearly 4%, with Woodside and Santos both down more than 4%. All in all, Michael, pretty rough day on the market.
Yeah, you can say that again. What about the Aussie dollar?
It's trading about 72 US cents. That's mostly because the US dollar is so strong on the back of expectations of higher interest rates in the world's largest economy. In fact, against a basket of currencies, the greenback is at its highest point in more than 2 years. Michael, Brent crude is trading just above $100 a barrel, and gold is trading around $1,900 an ounce.
All right, big day. Plenty happening. We'll be back in a moment with the rest of the day's business news. Sean, the election campaigning is picking up pace, and the debate around carbon got plenty of attention yesterday.
It did, mostly because Labor's climate change policy is a little unclear, shall we say. On Sunday, Labor said coal mines would be forced to comply with a more stringent safeguard mechanism. Then Whitehaven coal boss Paul Flynn yesterday entered the election fray, saying he's concerned that Labor's policy is a carbon levy by stealth. Prime Minister Scott Morrison jumped on the idea of a new mechanism, saying the opposition is seeking to achieve net zero emissions through taxes. Opposition leader Anthony Albanese was forced to come out. He said there wouldn't be a carbon tax under Labor. Where's all that leave us? Not really sure about that, Michael. Mind you, the coalition wasn't having a great time on the subject either. Deputy Prime Minister Barnaby Joyce rejected suggestions by National Senator Matt Canavan that hydrogen hubs are a waste of time and the government should hit pause on its net zero strategy. Clearly, the Nats aren't united on climate change.
And of course, Sean, the Solomon Islands China Security Pact continues to grab attention.
Yes, the Chinese Foreign Ministry spokesperson yesterday said speculation that China wants to buy a military base in the Solomon Islands is, quote, fake information. It came as Labor promised $525 million in funding for the region, something Scott Morrison was very critical of. Also yesterday, Labor said it would bring in a new agriculture visa if it wins and reform the seasonal worker program. And finally, Michael, the Australian Electoral Commission is looking for 100,000 people to help staff polling booths on May 21.
That's a lot of jobs. Now, Sean, we mentioned this at the top of the show, and I can't believe this. This is a very, very high number, but more than a third of people cheat on their home loan applications. Not you, not me. So it's other people.
Yeah, 1/3. That's 1 in 3. So not you, not me. I wonder how Adam Lang is, our colleague is.
We should ask him. Let's find out tomorrow.
We will. Anyway, the 7th Australian Mortgage Survey from UBS shows that 37% of home buyers make mistakes, shall we say, when filling out the application form, and ANZ borrowers seem to make more mistakes than anyone else. More than half of the respondents to the survey that had taken out a mortgage with ANZ in the 6 months to the end of last year indicated they'd lied in their application document. And the large majority of those were advised to do so by their banker. Incredible. Not a good look for ANZ. Now, the next highest number admitting misstating facts were using Westpac. That was 40%. Commonwealth Bank was at 30% and National Australia Bank was at 19%. Interestingly, NAB's rate has come down sharply while its share of the home lending market has risen. That bank's doing something right. Of course, it is just a survey, and an ANZ spokesperson rightly pointed out that lending arrears at the bank at ANZ is better than its competitors. That's another good way of measuring the creditworthiness of ANZ loans.
Okay. Now, Sean, the other one we mentioned at the start of the show is a big fine, but Uber in Australia is facing a $26 million fine for misleading customers over cancellation fees.
Yes, it's being sued by the competition watchdog for saying customers could be charged a fee for cancellations that were actually free. They were never going to get charged that fee. And for inflating predicted prices of regular taxis booked on its platform. Obviously, that would have favoured the Uber drivers. Now, Uber has already admitted the breaches in a settlement with the Australian Competition and Consumer Commission. It's now going to the federal court to determine if a $26 million fine is appropriate. I'm sure there are a lot of people out there, taxi drivers particularly, who love this story this morning.
I suspect you might be right. Now, Sean, the inquiry into whether the Star is fit to hold a casino licence in New South Wales continues. And yesterday, it heard that the casino offered lines of credit of $500,000 without doing rigorous due diligence.
Yes, in that case, it was the founder of property group iProsperity, a guy called William Gu. Gu was also offered membership to the exclusive Diamond Club, even though he didn't quite meet eligibility requirements. Now, Gu is well known to Australian business readers. His $350 million iProsperity group collapsed in 2020 and he fled Australia. creditors' reports revealed he'd been borrowing tens of millions of dollars from companies within the failed group without repaying them. You would think the Star saw red flags when Goo's debts were being repaid by the chief financial officer of iProsperity, but apparently not. Anyway, the former CEO of Star, Matt Beckier, is due to appear this week. There'll be more headlines as a result.
Okay. Now, the 2022 Global Mining Report from KPMG, Sean, shows that the environment is the biggest risk to the sector over the next year.
Yes, and COVID didn't even make the top 10 risks.
Really?
The KPMG report speaks to more than 300 global mining execs, and really in a sign of just how much things have changed over the past decade, the environment now outranks commodity price risk and community relations and social license to operate. The talent crisis, that's something we hear a lot about from the local miners, comes in at number 9. And in fact, it's the first time in the report's history that prices haven't been ranked at number 1. ESG is such an important part of that industry, and the companies that are doing well are actually benefiting in terms of share prices.
Okay. Now, how about this for a fall, Sean? EML Payments share price tumbled 39% yesterday after it downgraded its profit outlook. That is quite the tumble.
It sure is. And there were a few investors just a bit frustrated by the payment solutions company. Now, the group downgraded profit by 7% and the shares fell really hard. In fact, back to the lowest level since the pandemic first hit the market in March 2020. About 60% of EML's revenue comes from Europe. And remember last year, the Bank of Ireland raised concerns about one of its subsidiaries in that country. That sent its share price south. Now, it has been the subject of takeover speculation by PE group Bain. That helped boost its share price. Then the downgrade yesterday, I just think investors are losing patience.
And just a quick one for you, Sean. Western Australia has dropped mask mandates for most indoor venues and proof of vaccination requirements,
thus rejoining the rest of the country finally. Of course, Premier Mark McGowan remains in isolation as he recovers from COVID. One of his children ended up in hospital. We hope that the whole McGowan family are okay.
Yeah, absolutely. Now, moving on to overseas news, and the Chinese central bank said it will increase support for the world's second largest economy yesterday.
Yes, this ties into our main story. Now, there are growing fears that China's growth rate will slip even further thanks to the COVID lockdowns. That's really rattled equity markets. We've seen that in Australia today. Yesterday, though, the People's Bank of China said it will step up the prudent monetary policy support to the real economy, especially for industries and small businesses hit hard by the pandemic. Just as an aside, did you know that Beijing is one of the hotspots of the pandemic at the moment? And today they're starting to test 20 million residents over the next week.
That is extraordinary. It's just a whole nother scale, isn't it? Of the logistics involved in that just are mind-boggling.
It sure is. Can't get your head around it.
Now, speaking of huge, how about this one, Sean? Everyone's been talking about it online, and half of Twitter thinks the sky is falling in. But yesterday, Twitter accepted Elon Musk's offer of $46 billion for the company.
Yes, the 16-year-old Twitter will go private. It will make Mr. Musk, of course, very, very powerful, even more powerful than he is now. It certainly brings to the fore the concept of free speech. Twitter has been dumping tweeters who it says transgresses its hate speech and misinformation policies. That includes people from author Naomi Wolf through to pop star Nicki Minaj. But that's also invited plenty of criticism. Now, Twitter founder Jack Dorsey, who left the company last year, yesterday said it was a great move for Twitter. We all are waiting to hear from Donald Trump, of course, the former US president, who used Twitter to great effect before being kicked off the platform. He said he won't return no matter what happens, even if he is allowed under the ownership of Mr. Musk. I wouldn't bet on that one. Anyway, it is by far the biggest and most talked about deal so far this year anywhere in the world.
Sean, I'm just surprised. I never thought I would see the day where you would mention Nicki Minaj on Fear and Greed.
No, it's a fair point.
It's got to be a first time for everything, isn't there?
Yeah.
All right, one more for you here, Sean. The Humble tomato sauce bottle is under fire as investors push for new disclosures and targets around health in food.
Yeah, it's a really interesting story, this one. Big investors are pushing the big food groups like Nestle, Danone, Kraft Heinz and Kellogg to do better, setting out nutrition scores for the food they produce. Now, the investors have already convinced Unilever, one of the absolute major players in that sector, to change how it reports nutrition. Basically, the global obesity epidemic is at the heart of the push by investors. Now, these investors hold around $3 trillion in assets, according to the Financial Times. So they have some sway. They want standardized health metrics so customers can compare tomato sauce bottles against other tomato sauce bottles. Interesting story. It's got a way to play out, but I think this will actually, because of the size of the managers involved, we will see much better nutritional information on bottles and food groups, etc., coming into the future.
Sean, last week, this is linked to tomato sauce. Last week we learned from you the startling revelation that you do not like hot chips.
Yes.
So a quick question for you, just trying to get a better picture of who Sean Aylmer actually is. When you go to a cafe and you order a bacon and egg roll, do you get tomato sauce or barbecue sauce?
Well, to be honest, I get tomato chutney, but if forced into it, I'll go barbecue.
Barbecue sauce. You think you know a guy. Oh, God. I'm very disappointed, Sean. All right. Now, up next is the Fear and Greed Daily Interview. And today, Sean, you're speaking with Craig McFarlane, the Managing Director of Terrapin Australia.
Yeah, that's right. The expo and event business has been hit as hard as anyone else in the tourism and transport business over the COVID period. Just a really good chat from Craig. They're about to put on a big conference in the next couple of days for the accounting industry, but it's much broader than that. It's really about how they survived the last couple of years and what he thinks will happen to the expo industry as we go forward and emerge from COVID.
Yeah, it's a good chat. That's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 27th of April, 2022. Make sure you're following the podcast. Join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.